Good evening to everybody who's joining us here in the Western Hemisphere. Good morning to our friends in Asia. And to everyone else, I hope you're having a lovely day. I'm Alicia Ogawa. I'm the project director at CJEB for the project on Japanese corporate governance and stewardship. We're here to discuss the introduction of new requirements for becoming a publicly traded company in Japan. It's a topic of critical importance to Japan's financial markets and economic growth. It's a tremendously complex topic with a lot of details that are not yet well understood. I think it's fair to say that both the foreign media and the Japanese media have been very quick to dismiss these reforms as completely meaningless. I'm not sure that's entirely fair, although I confess I'm part of a large crowd that would have been happier with stricter rules. Given the heat and the controversy around this topic, I've been exceptionally fortunate to persuade our speaker, Mr. Yamaji, the CEO of the Tokyo Stock Exchange, to join us and give us a deeper view of what will actually happen on April 4th and what the longer-term effects are likely to be. Mr. Yamaji spent almost 40 years with Nomura Securities, and he's held several senior positions in Nomura's global businesses, including CEO of the Global Investment Banking Unit. He became a director of JPX in 2013, and he was CEO of the OSC before becoming president and CEO of the TSC. So I think it's safe to say that we're dealing with someone who has a very deep understanding of the investment industry and the global financial markets. Let's dispense with some brief background. What have been the issues that led the TSC to undertake this reform, a process which began in 2018? For decades, there's been an unbroken increase in the number of companies listing on the TSC. In the past decade alone, there's been an increase of 30% in the number, which now amounts to about 3,800 companies at present on the exchange. However, the reasons for Japanese companies to seek to become publicly traded companies are not primarily for the purposes of raising capital. Until 20 years ago, most of them relied primarily on bank debt. Instead, the reasons given in many surveys show that having a listing on the TSC is thought to help to attract the best new college graduates and to increase a firm's prestige with its customers and its bankers. Until quite recently, there was little awareness that being a publicly traded company implied a responsibility to shareholders. A TSC listing is considered a right and not a privilege. Given this attitude, the performance of the Japanese stock market has been underwhelming compared to most of its global peers. The introduction in 2015 of the Corporate Governance Code has helped raise awareness of Japanese executives as to their responsibilities to shareholders. But the main issues holding back better stock valuations, low liquidity of shares due to cross-shareholdings, reluctance to engage with shareholders and other outsiders, and a lack of focus on the return on capital are improving only very slowly. To save Yamaji-san's time, let me give you an extremely brief outline of what the new reforms look like. Many of you will already be familiar with these. Emiko-san, if I could ask you to put up the slide. So the current first and second section of the TSC will be replaced by two new categories, the prime and standard markets. Companies seeking to list on the prime section, which will be the best of the best, will have to demonstrate that at least 35% of their shares are freely traded in the market, that independent directors make up at least 1/3 of their boards, and that their market capitalization is at least 10 billion yen, or about $87 million. One criticism that the media was very quick to make is that a majority of companies who are now on the first section TSC, nearly 85% of them, will be transferred to the prime section. In some cases, even if they do not meet the requirements of prime listing at present, they will be grandfathered into the prime section. This is a topic I know Mr. Yamaji will discuss. So the criticism is that little will change. Recently, I've received a surprising number of questions and concerns not about the prime market, but about the standard section, which is an area for companies who do not yet meet or who do not aspire to meet the requirements of a prime listing. In short, investors worry that companies who choose this category because it is less strict will have few incentives to change and grow. Finally, the growth section is fairly analogous to the sections of the TSE that already exist for young companies, but which will now be consolidated into one section. Let me explain how we're going to run this discussion. I've received an unprecedented number of questions and comments about the reforms, and I've gotten many, many emails concerning a number of very specific transactions, mergers, spin-offs, MBOs, etc. In addition to the sheer volume of the questions, the range of topics is enormous. So I've chosen to distill all these questions into four categories as follows. First, we'll talk about the background of the reforms. Second, the transparency of the data used to qualify for prime and standard. Third, the enforcement of the requirements, including changes to market indices. And lastly, we'll ask Mr. Yamaji to talk about the longer-term implications of the reforms. After I've given Mr. Yamaji a chance to respond to all of these questions, we'll open it up to Q&A from the audience. If we don't get time to answer your questions, because there are so many, please don't hesitate to reach out to me by email, and I will do my best to get you an answer. My Columbia email address is on the CJEB website, or feel free to use my personal email, which is just my name, aliciaogawa@gmail.com. So I'd like to now welcome Mr. Yamaji, and I'd like to thank him so much for taking the time to be with us and for sharing his views on all of these important changes. Can I welcome Mr. Yamaji to
yes, thank you very much, Alicia, and also thank you very much for inviting me to this webinar. I'm very glad to speak to you all today. I hope today's session will shed some light around what is about to happen in Japan. And first of all, as you said, I'd like to emphasize that the goal of the market segment reform was not just reducing the number of prime listed companies from the number of first section listed companies. And so let me explain those kind of things from here. The current market segments were carried over from the cash equity market of TSE and OSE when they merged in 2013. And at that time, TSE and OSE merged and established the JPX, and all the cash equity market came to a TSE, and all the derivatives market went to OSE. And there were 5 market segments in the cash equity market: first section, second section, and Mothers, JASDAQ Standard, and JASDAQ Growth. And we did not realign those markets at the time of the merger, as it was imposed too much adjustments to our market participants or market users and other stakeholders. 5 years later, in 2018, TSE started a discussion about, 5 years later, the merger had settled in nicely. And also we started receiving some of the inquiries or requests from the market users about the possible review of the market segments. So TSE started a kind of a discussion about the possible market restructuring. Then later, Japanese FSA's Financial System Council took over the discussion and finally announced the new market segments in December 2020. There were 2 issues mainly discussed. The first issue was that from an investor perspective, the characteristics of each division were unclear. In other words, the first section, there are many companies listed, and the sizes and the types of the business are so varied. It's hard to see a common characteristics. And the second section, Mothers, JASDAQs, and the segment were left unchanged from 2013. It's hard to see the differences in each of the market. So another issue is that market segments are not functioning well as an incentives for listed companies to achieve their growth potential. So as for the first issue, the market will be restructured into 3 market segments that have a clear differences for investors, while encouraging listed companies to strive for corporate value improvement in the market segment that is most appropriate for them. In the prime market, companies that welcome investment from overseas investors have an adequate size and liquidity and strong governance. And second, the standard market, companies with adequate size and liquidity and governance for the listed company. And the growth market, startup companies with high growth potential. As for the second issue, we have standardized the listing criteria and continuing listing criteria. In other words, the delisting criteria. So criteria for listing and delisting used to be so different. In other words, once you list your shares, you don't need to worry about the kind of the situation where you are forced to be delisted. So, but now they are standardized, companies have to seriously work towards sustainable growth. And the ultimate goal for this market restructuring that we intend to let Japanese companies work more proactively towards sustainable growth and mid to long-term value improvement, and to create an attractive and investable market from the viewpoints of both domestic and overseas investors.
Thanks, Yamaji. We're going to talk about the enforcement of these requirements later, but I wonder, when the council was talking about the lack of incentives for growth in the exchange, what were some of the main issues or main obstacles that were identified as obstacles to growth? Were these the ones? Go ahead.
Go ahead.
I was going to say, were these some of the things that were addressed by the Corporate Governance Code? And if so, why wasn't the implementation of the Corporate Governance Code by itself enough? My answer to that question, I want to hear yours, but my answer to that question is, I think it's very helpful that the Corporate Governance Code has now been embedded in the listing requirements, because it's a sort of strict law now instead of just a suggestion, right? But what were some of the obstacles to growth that the council identified, some of the incentives that needed to be put in place?
I think, one of the reasons is that, as I told you, there's no enforcement for the companies to delist if they fail to grow, as expected. I think there should some sort of, penalty they have to face with, right? So the best way, I think other markets doesn't have this kind of approach. I mean, New York or NASDAQ has the listing requirements, and delisting requirements are different. And that was so as the TSE used to be. But we set up as both standards the same, so that they have to continue to be, cautious about their stance, whether they are trying to grow as they were at the time of the listing or not. So I think it's a kind of incentivize them to continue to make efforts to sustainable growth. That's very important. And I think, well, as you said, that the corporate governance code at this moment is also, it's kind of, growth is the very important theme for the corporate governance code. But at the same time, there's no such, I should say, it's a comply or explain, even though you said that it looks like a rule. It's basically, it's a principle-based approach. So
True.
there should be some sort of, penalty. That's one of them.
Yeah, one of your colleagues used to say to me that it used to be common for companies on the TSE1 to get moved down to TSE2 if they didn't do a good job. And we both agreed it's sort of like, it meant that the TSE was sort of the doghouse. TSE2 was sort of like the doghouse, which is not what it should be. So I'm going to combine the next two questions, and please answer as you see fit. But I know you're aware that many investors feel that the requirements should have been stricter. So I wonder if you could tell us a little bit about how these requirements in terms of market cap and tradable share float were determined, and how would you respond to some criticism that there's still too many companies in the prime index and that they're too small? I like to mention that according to the JPX data, 40% of all listed companies on the TSE employ less than 1,000 people. The S&P has 500 companies, the Dow Jones only 30, Topix has 2,000. So how did you determine these requirements in terms of market cap, tradable share float, and how do you respond to the criticism that there's still too many companies in the prime?
I think, we came up with these numbers based on multiple public consultations and individual meetings with the institutional investors and trying to figure out what would be minimum tradable market capital size and the percentage of tradable shares that institutional investors would at least be able to trade. And actually, if you compare these numerical qualification or numerical numbers with other exchanges such as US or London, TSE has their strictest standard. And so a tradable market share capitalization, NYSE is a 40 million. NASDAQ is a 45 million. And the percentage of tradable share is LSE set up, it used to be 25%, but it's now down to 15%. So, and also, as I told you, there are no other exchange that I know that requires the same level of criteria at the time of the listing as a continuing listing obligation. So from the listed companies' viewpoint, I think TSE's requirement are quite tough to keep meeting for prime market. And the next question is still very small. Yes, that's, I believe, that's the problem we have at this moment, because median numbers of those TSE prime market and NYSE or NASDAQ, blah, 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 it's TSE companies are so small. And one of the reasons that I believe we have so many companies on the borderline, or in other words, on the just over the criteria. And I think, we have to bottom up those borderline companies to up. So other than that, we are not able to beef up the entire capital market. So I think, the set up the listing criteria, delisting criteria as the listing criteria is a kind of the sign for them to, if they stay around the borderline, and if they don't meet the criteria, they have only 1 year to improve. In other words, one grace period after their transitional measures is over. There are only 1 year grace period. That means that I think companies have to be a good enough room for their actual numbers over the borderline. So I think in a couple of years' time, I think so many companies who are in the prime companies would be good enough size over the criteria, so that they don't worry about meeting the criteria each year. I think that's a very burdensome for the management if they have to look at the numbers each year.
Yeah, you mentioned that the tradable float, the free float, the tradable float in the TSE is much more strict than other exchanges. I just want to anticipate what I know somebody in the audience is going to say, which is to say that cross-shareholding in other markets is not as serious a problem as it is in Japan. So let's wait to the enforcement section of this conversation before we talk about that. But I want to move on to now the transparency and the qualifications for prime versus standard. But I want to first ask, what was the purpose of having two sections on the big board? One of the investors who wrote to me said, companies who list on the JPX should be excellent companies, and that should be the standard. It should be one standard. But how do you think about there being two sections on the big board?
Well, that's a very interesting question. And also, I know that each exchange has different opinion. And we understand that, say, like NYSE just has one section, but NASDAQ has 3 segments. NASDAQ Global Select, 2,000 or 1,800 companies are there. And NASDAQ Global is 1,000 companies are there, and the NASDAQ Capital is 2,000 companies listed. So there's no right answer or wrong answer, I believe. But for us, purpose of having multiple segments for us is the sake of investors' convenience. I think with clear market concept, each market segment makes it clear for investors to invest in each of the companies. And in the new market segment, the three market segments have a kind of parallel relationship. And it's a horizontal relationship, not a vertical. So not the prime, used to be first section, second section models like. But now prime, standard, and mothers. And so there's no such a top, middle, bottom kind of relationship at all.
I understand. Thank you. The next question is about the data behind the requirements for prime or standard. Many investors have written to me and mentioned that they are concerned about the transparency of some of these calculations, notably the tradable free float. For these people, could you explain very briefly where the numbers come from, who supplies the data to the TSE, and how the numbers are verified by the TSE or the custodian bank or whoever it is?
Yes, for as for the tradable market share ratio, with regards to the listing qualification, our aim is to calculating this number is to check to see if the listed companies have met the required percentage or not. So in case of private market companies, the point is that whether the company has 30% or more shares held by the public or not. So 35%, once it is more than 35%, like 40%, we don't care what's the exact figures, like 41% or 39%, we don't care. If it is more than 35%, that's okay. So numbers come from the shareholders registries, and which is submitted to TSE by the shareholders registry agent through listed companies. And the TSE does the basic calculation through the systems or kind of AI. And we will scrutinize and separately calculate when listed companies might be in breach of the criteria. So if the listed company has less than the 35% requirements, say, for private market, that is the key and important information, and therefore the listed companies are obliged to disclose the actual amount. And the TSE notified to the company and how they are going to improve the ratio in the plan to meet the criteria. Now, actually in Japan, the numbers of shareholders and composition of shareholders are disclosed in the annual report, or as you know, the UHO. So you can actually do a preliminary calculation.
This must be a very big burden for the TSE, though, because, I mean, clearly shares are being traded all the time, and people take big positions all the time, or companies sell off their cross-shareholdings. Are you using AI systems, or are you?
Yeah, that's right. The basic calculation is done by AI, but it's once a year. So I think, and then we just screening very, very close to the 30% or below the 30%. So it's not so much burdensome, I think.
Okay. The next question about the transparency of qualifications is about the corporate governance code. And I think there's a little bit of confusion here because I've gotten this question from 3 or 4 people. You say that to be part of the prime section, you have to comply fully with the code. But according to your own data, only 26% of all TSE1 companies are fully compliant with the code. And I think the confusion is when you say fully compliant, you mean that the company has submitted a corporate governance report which explains that they're complying and they're not complying and they're offering an explanation? Or are you saying only the companies who have strictly complied to all those articles will be allowed into the prime? Could you, it's a silly question, it's a simple question, but could you explain what that means?
Sure. Yes, when we say, excuse me, when we say compliance with the CG code, we do not mean in the sense that listed companies adhere to the CG code like a rule or hard law. And corporate governance code takes a principle-based approach, as I said to you. So when we say compliance with the corporate governance code, the listed companies have to comply or give a satisfactory explanation to the reasons of not following the model shown in the code. So when companies explain their reasons for non-compliance, they should do so by explaining the measures they have taken or they will take for those non-compliant principles in a manner that non-compliance will gain full understanding from the shareholders and other stakeholders. And it is not to say that the listed companies can disregard the code, because listed companies have to fully disclose their situation and therefore are accountable to the shareholders and other stakeholders and show that their understanding is appropriate in accordance with the aim and spirit of the code. Offering a superficial explanation using boilerplate expressions would be inconsistent with the concept of comply or explain. So just to briefly touch upon the reason for this, principle-based approach, Japanese, corporate governance code seeks growth-oriented governance by promoting timely and decisive decision-making. So each listed companies are required to implement the code depending on the industry and company size or business strategy, business characteristics, company organization, and blah, blah, blah.
Yeah, it's a very nuanced or delicate evaluation, I think, because, I myself, I've looked at many companies where the explanation why they're not doing it, it's not part of our strategy for very good reasons, and here they are, is sort of much more valuable than a company that just says, yes, we comply. Yes, we comply. Yes, we comply. So it's a very nuanced judgment, I think, on your part.
Mm-hmm.
But, I understand. Thank you for your explanation. Moving on to enforcement, Mr. John Trammell of Symphony Partners, Symphony Financial, is asking the question that everybody wants to ask you, which is about, can you provide guidance on how many years the grandfather period will last? How many years will you give companies who are on the prime but don't meet the requirements yet? How many years will they get to meet it? And will there be additional requirements to be on prime during that time?
Yes, this is the specific question I have been asked for a number of times whenever I had interviews with the Japanese media and the foreign media. And I had interviews, I don't know, 10 or more interviews in the past one month. And I think we hope to provide a kind of some general policy on the transitional measures. We called it the grandfathering, the transitional measures. And I think sooner the better. And as we will discuss the matter at an advisory committee, and we will form up soon, or not too distant future, and we will ask them to discuss 4 or 5 times at the committee, and we will announce something. I hope that at the middle of this year or towards in autumn or something like that. That's our plan.
That's great. Because another registrant, a lovely person at Neuberger Berman named Kei Okamura, he made the point that companies will need time to adjust to these new requirements or whatever, and also investors will need to know how to judge. So I guess the message is the sooner you get that time period out in the public and any other requirements that you might make of these.
I think yes, these listed companies which going to enjoy the grace period are required to disclose their plans to meet the listing criteria, and also they have to disclose the progress of their plans periodically. And this is a commitment to the market, not only to us. So those plans to meet continued listing criteria are publicly available on the TSE's website. And if their progress is not good enough or behind the schedule and the gap between the plan and actual numbers are so big, TSE would request them to revise the plan so that the plan actually reflects the reality. So, and of course, the new plan should be disclosed publicly.
Yes.
I think, so everything would be disclosed periodically so that investors can react to it. And after, say, like January 11th, last month, this year, when all of those plans came to the public knowledge, and there were analysis done by the weekly magazines that which companies' plan were serious, regarded very serious, or which ones were not. And the stock price reacted. I think, this kind of market reaction would be the power to push them to move forward, I think. And I'd like to state that the listing qualification is just a minimum standard. And we can set up a framework, but it's a minimum standard. So I think the crucial player in the market that has a that has a substantial power to push companies move forward or take actions are investors. I think so that I would like to expect too much investors as well as especially the institutional investors. We have a high hope for the investors taking action to engage in a constructive dialogue with the companies.
Yeah, you're touching on 5 or 6 different topics for which there are all questions here. But before we move on, I think it's important for the audience to note that the companies that are preparing to meet the requirements, who might already be listed on Prime but are preparing, as Yamaji-san just said, their plans for how they're going to meet those requirements are publicly disclosed, and they're on the JPX website, if I understand correctly. I think the other thing that we should talk about, it's kind of the next topic, is if they are not making progress, there's also a penalty applied to them in terms of their weighting in topics. Is that not right? And I think this is a point that is not generally well appreciated. So if you could talk about how the topics and the other indices, such as JPX NSA 400, are being adjusted in a way that is going to further incentivize companies to meet the requirements.
Yes, topics, as you know, used to be composed of companies listed on the first section of TSE, and number of constituents is 2,185 at this moment. And but with the new market segment, topics will be separated from any of the market segments. In other words, specifically, we will enhance the functionality of topics by gradually reducing the weighting of constituent stocks with a total market capitalization of less than 10 billion yen. And so at the end of the process, companies with less than 10 billion yen, even if they are grandfathered, will not be constituent of the topics. And this is the topics division for non-compliant companies. And however, topics is currently widely used as investment benchmark, as you know, by ETFs and the pension funds, or including GPIF. So with total asset AUM is exceeding 70 trillion yen at the end of March last year. So in light of this, the reduction will be conducted in a 10 quarterly instrument starting in October 2022, this year. And we'll proceed in a step-by-step manner until the end of January 2025. And also, I'd like to a little bit touch upon the JPX Nikkei 400. Just, why we are taking this kind of very careful steps for the topics revision. One of the reasons is that we learned from the JPX Nikkei 400. And JPX Nikkei 400, we introduced the index back in 2014. And even though JPX Nikkei 400, doesn't have any, doesn't get any effect from this market restructuring. But I think, at this moment, asset under management of JPX Nikkei 400 is about 3 trillion yen, and which is smaller than topics of Nikkei. But I think it's not a failure. But not good enough to substitute for topics, because topics has a 70 million. And when we introduced JPX Nikkei 400 back in 2014, it was not based on the market cap weighted approach, but also governance factor added up. And when we introduced this index, there was an impact on listed companies. Many companies would like to become a constituent company of JPX. And also, at that time, I was president of OSE. We listed futures and options right after the introduction of the index. So the users now have the hedging tool as well. And average daily volume of futures product in a couple of months and became a 40,000, 50,000 average daily volume, which is as a newly listed product. This is a success, I should say.
I think you're right.
Then later, as I told you, it's still 8 years later, we have only 3 trillion AUMs, and we are not sure, even though we have a lot of hearings with the institutional investors about why it is not so widely used as we expected. And every institutional investors have a different opinion. And if you ask 5 institutional investors, there are 6 opinions. But under say like underperformance or too much correlation with the topics, or unpredictability due to the governance factor, or too many reviews. We reviewed once a year, and we replaced about 10% of the constituents every year. So too many replacement, blah blah blah. But in the end, the fact is that the investors, did not choose JPX Nikkei 400, and we learned that the cost of switching benchmark from one to the other in a short time or period is quite high, and will be a challenge. And so, in light of such learning, the reforms are underway to further enhance the topics, functionality, but as an investable index, but. I think we thought that we have to maintain the continuity and for the smooth transitioning of the revised topics. So obviously, we will continue to strengthen the function of those existing indices as investment targets, and while responding to the expectations of the market participants by providing new indices like the capture mega trend as ESG. We will start calculating with the FTSE. It's a Topics 500 based carbon neutral index from April, and we will start calculating those kind of indices as well. But we learned that it's very difficult or challenging to create a new major index instead of one existing.
No, I think that's a very good explanation, Yamaji-san, and it's very clear. It's very easy to understand what kind of upheaval you would be causing to the big passive managers if you just completely switch to a new prime index or whatever. But going back to NSA 400, JPX NSA 400, yeah, it was a failure in the sense that it underperformed some of the other major indices. But at the same time, when I look at your white paper, which categorizes companies or indices, companies in the indices which have, for example, the highest level of compliance with the corporate governance code, or have the most number of independent directors, which have no problems with subsidiaries, listed subsidiaries, the NSA 400, the JPX NSA 400 is always the best. So in a sense, you did succeed in creating an index with the best companies in it.
Yes, yeah.
You didn't succeed in making it a workable index.
Yeah, that's right. Yeah, totally agree with you. Yeah.
Yeah. Okay. Can we keep talking about the compliance enforcement? So you've made many references to the delisting process, but I wonder if you could speak a little bit in detail, because we've seen a lot of real controversies about whether a company should be listed, how it should be delisted, what process should be undertaken. And I think you and I have talked about, would it not be a good idea to have an OTC market where companies could be delisted, but investors could still trade them? So could you explain the process of being delisted and whether you think an OTC market is a useful idea in Japan?
Yes, as I said, that given the continuing listing obligation and its standard has been raised in each new market segment, and listed companies which do not meet the criteria have only 1 year, as I told you, to improve the numbers. In other words, if the company does not make it delisted immediately, and therefore it is necessary to secure secondary venues of trading, opportunities for investors to trade, especially for the shareholders of listed companies that will no longer be able to maintain them. And also, while there are transitional measures for already listed companies, however, there are no such transitional measures for companies that are newly listed in the new market segment after April the 4th. So the secondary trading opportunities are necessary in that sense as well. So we recognize this as a very important issue. And we hope that we start deliberating our options after April the 4th.
If I can express some sympathy for JPX, it seems to me there have been some cases in the past where the decision to delist a company was based on very subjective or qualitative criteria. And of course, I'm thinking about Toshiba. It seemed to me like that was not fair. It seemed like the FSA should have made that decision. Anyway,
those kind of cases, Alicia, it's a bit different because those are fraudulent treatment of accounting treatment, right? That's the process is a bit different. But similar kind of effect as I told you, yes. Right. The process is a bit different from those fraudulent accounting treatment.
Right, but again, the standard of has the company made an improvement is a very subjective stance, right? Yeah.
Yes, it's a very subjective, yes.
Yeah. How do the reforms impact the question of parent sub listings? What incentives are there for companies to resolve these problems, given that they've been such a big focus of governance experts and investors? And can you talk about some examples that you've seen?
Yes, I think, if you look at the statistics in last year, 2021, there were delistings of the companies, 89 cases we had. And of which 3 were kind of a simple delisting. I mean, in other words, they meet the delisting criteria. 86 were corporate action related.
Right.
And of which I think, mergers and M&As or MBOs were about 67, and the 16 was the cases for so-called the company became a full subsidiary of another company. There was a dissolution of a parent and subsidiary relationship. And if you look at the figures in 2020, 1 year ago, it was 54 cases were related, corporate action related. And the 2019 was only 39 cases, which was corporate action related. So, but none of those 83 cases last year, none of the companies said that they are delisting because of the market restructuring at all. So, but because we announced the market restructuring in December 2020, so 2021 full year was full knowledge about a new market restructuring. So you can presume that some of these companies which reviewed their business portfolio in light of the market restructuring, I think. And this year there are already 12 delistings, including plans. And also, I often talk to CEOs of investment banks or securities firms in Japan, and they are all expecting that kind of a more organizational restructuring or M&As would increase because of the market restructuring, because those, as I told you, those borderline companies have to beef up their corporate size in some ways, maybe through organic growth or maybe through M&As.
Yeah, there have been some really notable transactions like NTT Docomo and NTT, and
Yeah.
um,
And I think also, did you mention about the cross shareholdings as well? No, not yet.
well, yes, several times. But please, what is your?
Yeah, okay. So I think I believe that it's not directly to the result of the new definition, but already recent years cross shareholding are gradually being unwind quite substantially, and partly thanks to the higher corporate governance mindset that the Japanese companies are adopting. Some companies have even publicly stated that they will unwind all the cross shareholdings. So I think it's steadily coming down. That's for sure.
Yeah, well, you have Komatsu, right? Is one.
Oh yeah, that's right.
And Sumitomo Shintaku is another.
Yeah, Sumitomo Shintaku, yeah, said so as well. Yeah.
Yeah. So
And also Mitsubishi corporations. Yeah, there are many.
yeah, a number of investors I've talked to who have held shares in Company A for many years say that Company A had been for a long time thinking about a merger with Company B, but this change of the rules was the kind of catalyst to say, okay, now's the time to do it.
I see. Yeah.
And that's why I say I think that I wish the listing requirements were a little bit stricter, but I think it is unfair to say that it has no impact. It obviously does have some impact.
Yeah.
The other interesting incentive for corporate reorganization and spinoffs is climate change, right?
Mhm.
So you have a number of companies who are shedding assets, whether it's INEOS or yeah, those kinds of companies, energy companies, and some other trading companies.
Mhm.
But what about the companies who, I think I probably skipped over this question. How do you react to the concern that companies choose to be on standard, even though they could qualify for prime because it's too expensive? I have
Mhm.
sympathy for this, right? It's too expensive to produce TCFD reports and all the other reports and English language documents. Um, so some companies are choosing to be on standard because it's too expensive. Some
Mhm.
companies are choosing, I'm told, because they really don't want the responsibility of engaging with shareholders. So how should we look at the standard section, the future of the standard section? How do we make sure that you keep the fire on them?
Well, I think standard section. Those we have 23 companies which met the criteria for prime companies, prime market, and then yet chose the standard. And I think as you know, market segment is a kind of a framework. And once we set up the framework, I think the company would choose whichever the market segment which they believe is suitable for them. So it's very difficult for us to force them to do something. If you are the prime eligible company, so why don't you come to the prime or not? I think again those are kind of the power of the investors that they should push the companies. You have to go to the prime, and you have to enhance the liquidity because the prime market is more liquid than standard. And I think those are the kind of the things I do hope that institutional investors would push them to make them make efforts to go up again to a prime market. So but obviously, I mean, we have checked that those are 23 companies cases, and they have their own board of directors decision and resolution to become a standard company. So, well, but some of the companies are, I don't know, it's a very huge company, and so, but I think for us, what we can do is a bit limited. That's my opinion.
Right. So I've heard some people describe the standard market as a kind of like a hunting ground for activists or merger specialists or private equity firms, et cetera. And again, there's a question here from Mr. Trammell again to say, is there any fear that you have that the new requirements will drive so many companies to choose delisting, to choose MBOs, and therefore it'll reduce the revenues on your exchange? Because another point I want to make is it's very cheap to be listed on the TSE compared to New York, right? You just need to raise the listing fee.
Well, yes, I think, as again, that, if once we set up a framework of the market, how does the market users, use it? It depends on them. I think if the company decides to, I mean, as you said, that the MBOs, we are now seeing so many MBOs nowadays. And, but, I think if that's the choice of the company, that's okay. I mean, yes, it's a, reduction of our revenue, but that's a market. I think market users would decide how to use it. And also another point is that as for the M&A transactions, as I told you, many CEOs of securities firms are expecting that the number of transactions would be increased, and I think that's good for activating the market activities, and that's good for the value enhancement as well. So
Sure.
I think yes, on one side there's the reduction of listing fees, but at the same time, if the market becomes more active than now, that's better for us as well, because our fees for trading fees is coming in. So well, I'm quite neutral on that kind of things.
It is striking to me, though, how cheap it is to list on the stock exchange.
Thank you very much. Would you please speak up?
Yeah.
Would you please speak up and also write a fee test that Tokyo's listing fees are too cheap compared with others? Yeah, that's I'm very much welcome to that kind of thesis.
Yeah. I got so many questions in the emails and when people registered for the seminar that really weren't related to the TSC. They're not really your problem, but that are related. So one listener tonight says, what rules are there for management incentive plans in Japan? Are company executives, pay linked to capital returns or profitability? And the answer is that's not your problem. But but that would be a great way, right, to improve the value of your exchange if
Right.
if executives were more focused on the return on the appreciation of the stock price because they paid that way. So yeah, do you have any comment about that?
Well, yes, I think, however, nowadays, I think, I mean, pay schedule for the board of directors, executive pay schedule is that, more and more linked to the company's performance, including some of the TCFD or ESG type of non-financial statement related type of, disclosure and what kind of achievement they made, the kind of things. And still, it's a big gap with US or European companies, I think, but it's, getting better. I think, meritocracy or, I think companies performance-oriented pay schedule kind of things.
Yeah. In America, we're seeing an awful lot of legal issues with CEO pay or executive pay being tied to ESG goals because it's so difficult to
Yeah,
define.
it's quite intangible. I mean,
But I think it would be lovely to see more Japanese CEO incentive pay just simply linked to the corporate
yeah,
performance, ROE or share price or whatever you have.
yeah.
Let's move to the end of this questionnaire, which is about your views of what the long-term impact of these reforms will be. You've talked a little bit about, the increased M&O, MBOs, or increased attention to return, increased value that companies will hopefully feel pressure to achieve. But what do you think of the long-term? We mentioned MBOs and mergers, sales of cross shareholdings. What do you think about foreign listings? Are you hoping to attract more foreign listings? I think back in 1990 there were almost like 200, and now there's about 6. So clearly, I mean, that's an opportunity for you to compete with Singapore and Hong Kong. You've talked with me a little bit about SPACs and new venture capital vehicles. What are the plans or the dreams or the aspirations that you have for
Mhm.
new areas for the TSA?
Yes, as for the foreign company listings, and I was in a battlefield as a soldier of Nomura at that time in US to invite a lot of the US companies to list their shares on the Tokyo Stock Exchange. And yeah, finally, as you said, at one point it was 200 companies were there, but because it was almost we asked them or begged them to come to Japan, and without so much, reasonable, way of thinking. It's just a list of shares on the TSE. So, after that, when you have a recession or when you have a certain shock or, global financial crisis, that kind of things, it's very easy to reduce costs, through that kind of, non-strategic expense. You can reduce the cost, and then so many companies or all the companies delisted from the market. So we learned that, unless you have a good enough tie or link to Japan, it's, the similar thing, if similar thing happened that the recession comes, it's, all the companies will disappear. So I think now we are trying to do is that, we have been inviting Asian startups to do IPOs in Japan. Last year we had we called it the cross-border IPOs. So definition is three ways. One is a company based in abroad. The other one is a company usually originally based in abroad, but re-established is a Japanese company. And the third one is a Japanese company is the foreign-born CEOs. And we had 5 cases last year. And one of them is the API from Taiwan. It was a Taiwanese company, and still main operation is Taiwan, but they re-established it as a Japanese company, and the IPO value at that time is 1.6 billion US dollars equivalent, and went up to 2 billion. But and according to the newspaper, they are now planning to apply, maybe may apply for the prime market. At this moment, they are the mothers.
Right.
And yeah, and Japanese mothers market is quite highly rated by Asian startups, because you can raise ample amount of capital, and also liquidity is high compared with other Asian exchanges. So I know we have been marketing promotions among Asian companies to invite those companies, and now we are seeing the result of it. And we will continue to do those kind of things. And once their business is quite, linked to Japan, so they will stay in Japan. And I think, this kind of way is probably the appropriate way for us to promote in the future. And we have maybe 10 companies in the pipeline, and I don't know how many come to the market this year, but maybe 4 or 5, and that we gradually increase those kind of companies from Asian startups.
That's great.
And,
I've got 2 questions, and I know that you are prepared to talk about this and you're interested in this, is about the plans for SPACs, or how the TSA is looking at SPACs. Yeah, that may be the last question we have time for, but could you tell us what
okay.
you're thinking of?
Yes, SPACs, we have established the kind of study group on SPAC September last year. And the consists of 20 members, I think, experts of the markets. And I think they had 5 or 6 meetings, and just issued interim report yesterday. And yeah, SPAC, we are very much interested in to introducing similar kind of things in Japan. But at the same time, the U.S. market is a kind of a special market, as you know.
Yes.
The special, it's totally different from other markets, including Japan, other markets, the European markets, the Asian markets, and the Japanese market, because you have such a multi-layered risk takers, like hedge funds, or blah blah blah. Those kind of thick investor base, no other country have.
Right.
So in other words, in Japan, the main players or main investors in the IPO markets are individual investors. So, if we import the SPAC as it is into Japan, it's a very, very, kind of so many source of problems, I think. So how do we protect investors, and also, but we'd like to make it possible in Japan. So how do we balance between those two? So that's a question at this moment. But I think, I would like to make it happen. And whether there are many issues coming out or not, it depends on the market needs.
Yeah. There are still 8 or 9 questions I didn't get to. So for those of you who have asked questions that weren't answered, please do feel free to reach out to me, and I am happy to try to get a response from Mr. Yamaji's wonderful staff or get you an answer myself. So Mr. Yamaji, I just want to say thank you so much for spending so much time with us and sharing your views on the information. I wish you all the best with this reform. It seems that you have a lot of critics, but you're a tough guy, and I'm sure you will overcome, and I wish you all the best. Thank you again for spending so much time with us.
Well, thank you very much for this webinar. I enjoyed this webinar very much. Thank you very much, and I hope next time I will see you in person.
I hope so. Let us in. Please let us in. So I want to thank everybody for joining tonight, and I want to thank the wonderful CJEB staff who always makes these things go quite seamlessly. And I believe that we have a slide which lists all of our wonderful supporters. So I want to thank all of them for their generous support, without which none of these programs could be possible. So thank you again for joining us tonight. We've got a lot of programs coming up very soon. So get on our mailing list, and we hope to see you again here quite soon. Thank you again.